Good morning to all traders and welcome to another Markets in Waves. It is the August 19 today, and we've had some very interesting moves yesterday. As expected though, the thing is that we managed to switch to the, well, should I just say alternative? Call it that. Quickly, managing to at least protect, I guess, and then probably gain as well from this move. So you've got the dollar strengthening, contrary euro dollar, pound dollar is falling, the oil is falling, gold remains to the upside, I would say, fairly valued if we take into account the the situation in Afghanistan. In the S&P, it's falling, and it's falling quite nicely. So let's go and have a quick look on what I'm expecting from here. On the DXY guys, you remember we were looking at another leg to the upside. I wasn't expecting it to be that quick, but quick moves doesn't necessarily mean that we're going to see that continue. We've got an internal structure here, so my 1, my 2, my 3, my 4 are done. It looks like we are now going in wave 5. To me, it's either that wave 1 and 2 were done here. I'm going to see 3, 4, and 5. So maybe around 93, 74, which is the 100 Fibonacci extension of waves, of wave 4, pretty much. Okay. And actually, there's no. I wonder why do I have this like that. This is the move from down here to up here to 3 and down to 4. Okay. Equally, what we could do is we can assume that my wave 4 is my wave 5. That's going to get us to 93, 74. Or if we assume my wave 5 is going to be equal to my wave 1, then in this scenario, we're getting closer to 93.64. Both of these levels are quite close to one another. Might be a zone for a double top, some sort of divergence signal up here that is going to give us the signal to the reversal, because we are still expecting this wave Y to end here. Okay, now I see 94 as well in play, as well as the 94.22, as well as 94.72, which is the previous wave 1 top, right? So this is how we're going to keep that, maintain this impulsiveness to the downside in case we get there, of course. Now, obviously, for extended levels like this, it would probably mean that that is going to be our wave 1, okay, rather than our wave 5. So it's going to be 1 and 2, 3, 4, and 5. But if you compare that to what we get in 1 and 2, that looks a bit overextended, especially for the traditional markets as we're looking at the index, of course, maybe it's not very likely to be the case. So we need to develop, we need to see how this develops above 93.44. Should it remain there? Because our 5th wave could already be in, and take it from there. Now, I would be looking, guys, at the 93.25 to the downside. Okay, if we break that, then most likely to revisit the 92.96. Okay. Now, in euro dollar, we use a similar approach to calculate or to project where exactly my wave 5 can end here. If we use wave 1, we get exactly to 116, right? And this is the 100 Fibonacci extension as well, right? From wave, this move 1, 2, 3, and 4. If we look 1 and 4 from 0 down to 4, the 100 Fibonacci exactly 116. So you've got the 116 support, you've got the 116 Fibonacci, and you've got that being equal to wave 1. Which wave 5 and wave 1 usually are equal, right? So this is a very nice level to take into account. Now, we're breaking the 0.618 Fibonacci extension of this. So the next level to reach will be the 78.6 at 116.45. Makes a good level, round level, psychological support. Perhaps we'll go to 116.50 first and bounce there. But either way, again, similar structure. 1, 2, 3, 4, and 5 over here. Perhaps we might just get that to the ascending channel and move higher up. Now, we do get some sort of divergence here on the euro dollar. Okay, on the index we don't get that, but I do think that this is going to break fairly soon. However, I do believe we're going to get another signal at some point that is going to be another one, right? Because very likely to see something like this. okay? It is very likely. So we're going to get prices doing lower lows, the oscillator doing higher lows, and that's going to be the signal to the upside, most likely, right, be the case. GBPUSD, we were expecting since today is Thursday, so since Tuesday, if not mistaken, that this is going to be WXY, so we're going to, continue lower down. And we're also looking to get, closer to 136, or maybe said that we don't want to go lower than that. But, a dip was expected to the previous wave 4. Now, this is where the previous wave 4 ends, right? So 1, 2, 3, 4, and 5, perhaps we might be done already. But if the index continues moving lower, then pound will be under pressure, and we're going to might go down to the 78.6 Fibonacci retracement next around 136.58. Now, we want to see, this is a projected, this is an assumption of a potential move over here, right? Because even if we fall lower down, we're going to see a bullish divergence, hidden bullish divergence in those cases built on MACD and RSI. So that is very likely to be 1, 2, 3, 4, and 5 here. We're going to get that signal to the upside. Now, if we break below, guys, and because the situation, could also give us a potential move below that low, okay, that would mean that's not the 1 and 2, okay, but we'll still remain outside the channel. Don't forget, that would most likely mean this is my W. This is going to be perhaps like some X pattern, perhaps an ABC over here in the middle with an irregular flat, and then we're going to get a Y, okay? Because in wave 4, then we wouldn't have a simple pattern, we would have most likely a combination, okay? So pay attention to these levels to the downside on pound, because its structure is a bit different to euro dollar, okay? And now oil, expected another leg down. Over here, we didn't do, we did actually do a fresh low. We've got this as a WX and Y a while ago. We're looking at ABC. Obviously, after this correction over here, we talked about the potential of this being an ABC. It's exactly what's going on right now. I'm looking at the first move to the downside as wave 1, wave 2 here, and then 1, 2, 3, 4, 5 for 3, the 4 and the 5. So I'm looking at, going back towards this this trend line, because we hit once, we hit twice. We're looking for another bounce, which potentially is going to be the reversal, because we want to correct really over here now. As I'm looking at it, wave 1 or wave 2 or wave B, and then continue higher up. Obviously, we don't want to break below 6150. If we do that, we will have to go back and look at this particular structure and see how this pans out. But it's not, we don't prefer to go below that level, but we could get below that level, okay? We could get to, let's check where we even are, we're just down the 61.8. This is where we're bouncing right now, which is a strong zone, right? 64. And the next level up is going to be the 100 Fibonacci of W and X, which is around the 62.50, and from there we'll go 61.30, and then from there we go to 60.46, and obviously the 60 level. So towards the 50, this is what I am looking currently. The move to the downside looks impulsive, and there is no signs to show any sort of resistance to that or support, let's say, apart from the fact that a small medium-term divergence is being built here. So if we look at this, it's currently very, very little sort of divergence here is going to break this relationship most likely, and then we need to take into account the medium-term view here on the MACD. We can still go a lot lower down and still develop a very nice signal over here. Okay, so that's for oil as well. And the S&P, it was only yesterday, if I'm not mistaken, that I looked at this double signal here. When I see double signals like this is a very good opportunity for downside. We're looking at this. I changed my view, I think like maybe last week, if I'm not mistaken. I was looking at this as an ended diagonal, guys. A, B, and C is done. This is what it looks like to me. I cannot call this an A. That's not an A. No way, because this is a clear 3 move, okay? Unless if someone comes in and says this is 1, 2, 3, 4, and 5, but the structure doesn't look doesn't look like this. It looks like an A, a B, and a C. Now, and let me just check that quickly. I think my wave B is way too big for this, to be honest. Yes, it's way too big. So I was just thinking maybe it will be in a regular flat, but it's not the case. So what we're looking here potentially, guys, is for a very big reversal. We've got the signs on MACD and RSI, and what we need to see next is the break of 43.75 and then getting outside that diagonal trend line. If we get outside, obviously we can go straight down, we can go down and reverse, do a retest and move lower down, we can go down, that would be a false break, then move up, down, up, and continue higher. Okay, we do not know how this is going to play out, but for the moment, and with the current move, I'm looking at 1 and 2, 3, 4, and 5. Okay, so that's gonna be all for the day, guys. I want to thank you very much for watching, and of course, if you have any questions, don't hesitate to ask. If you have any comments or your analysis, leave your comment on our YouTube section. I'll get back to you as soon as I can. We'll be here again tomorrow with another Markets and Ways. Take care and trade safe.